Okay, now we're going to do application 2-4, which is a continuation of 2-2 and 2-3. We're going to finish up the month. The first transaction is on March the 25th, and it says sold services for cash. And we're still going to use the same chart of accounts on page 46, application 2-2. So sold services, we know that sold services means the same thing as sales. So on March the 25th, the two accounts that we're going to be dealing with are sales and cash. So we've got cash and sales. Our cash is going up, and it's going up by $1,100. So we're going to increase our cash with a debit, and we're going to increase our sales with a credit. And on March the 26th, it says performed $500 of services for Dominic Field on account. That means that we sold services on account to Dominic Field. So on March the 26th, the two accounts that we're going to be dealing with are sales, and Dominic Field has not paid us any cash yet. He's going to owe us money. We sold it to him on account, so that's going to go in his account receivable. So we have sales and account receivable, Dominic Field, and I'm going to abbreviate that AR and then D Field. So our sales is going to increase with a credit, and let's see, sold services for $500. So we're going to credit sales $500, and the amount of money that Dominic Field owes us is going to increase by $500. So we're going to increase that account receivable by $500. On March the 27th, ran an ad in the local newspaper, paid $125 cash. Well, if we look at the accounts in application 2-2, if we ran an ad, we're certain that that would be advertising expense. So the two accounts that we're going to deal with on the 27th are cash, because we paid cash for the newspaper ad, and advertising expense. So we have cash and advertising, which I'm going to abbreviate ADVER, and expense EXP. Our cash is going to decrease, and we're going to decrease cash with a credit. So we have a $125 credit to cash, and our advertising expense is going to increase. So we're going to increase that advertising expense with a debit. On the 28th, Hal Rosen withdrew $450 for his personal use. When you see that phrase, personal use, that means we're dealing with that drawing account. So we're going to use the Hal Rosen drawing account. And he withdrew money from the company, so we're also dealing with cash. So we have cash and Hal Rosen drawing. So we have cash, and that's going to go down. And the Hal Rosen drawing account is going to increase. So we're going to reduce our cash by $450, credit $450, and we're going to increase our drawing account, that's HR, with a debit of $450. And our last transaction is on the 29th, March the 29th. And on the 29th, it looks like we received a $250 check from Dominic Field on account. A check is the same thing as cash. So this just means we received cash, $250 from Dominic Field. So Dominic Field's paying on his account. So our cash is going to increase. And the other account we're going to be dealing with is Dominic Field's account. That's an account receivable. So our cash is going to increase by $250. We're going to increase cash with a debit. And Dominic Field's balance is going to decrease because he's paying it down. So his balance is going to decrease. We're going to decrease Dominic Field's account with a credit. So we're going to have a $250 credit for Dominic Field. And that is the last transaction for application 2-4 on page 47 in your textbook.